Welcome to the Climate Trends podcast, where we explore the latest in climate policy, finance, and sustainability. I'm Archana Chaudhary, and today we have with us a very special guest, Mr. Abhishek Acharya, Director in the Economic Division at India's Ministry of Environment, Forests, and Climate Change. With over 17 years of experience in the Indian economic services, Abhishek has been deeply involved in climate finance negotiations, including at multiple UNFCCC conferences or COPs as we know them. And he has played a role in shaping India's economic strategies around climate action. Today, we'll be unpacking global climate finance, India's stance at the COP29, and the future of India's carbon markets. Abhishek, welcome to the show. It's a pleasure to have you.
Thank you very much for having me on the show.
Let's go right in. Let's begin with the global context. We are witnessing rapidly evolving environment globally, and there are geopolitical shifts, the ongoing Ukraine conflict, changing US policies to debates over carbon border adjustments. There's a range of things going on. And climate finance has been a major point of contention, especially after COP29, where India had some very strong reservations about the $300 billion annual finance agreement. Could you walk us through a little bit on what India's stance has been and what specific concerns we have?
Well, to start with, India has always been, at least from the climate action part, India has always been a proponent of the Sustainable Development Goals, and that has been the cardinal approach for climate actions in India, both from adaptation and mitigation side. And we have already always maintained that climate finance has to be a flow from developed to developing countries. There are actually three aspects of climate finance. One is provision, mobilization, and flow. So, if you see the Article 4.3 of the convention, it clearly demarcates what are the basic tenets of climate finance. It has to be new and additional, it has to be climate specific, it has to have a concessional element or grant element, and primarily and very clearly categorized, it has to be from developed to developing countries. Because the historical responsibility of climate change is upon the developed countries, and we are the sufferers. So any climate action that we take has to be commensurated by the flow of finance and technology. So India has been always saying that it is the developed country aspect, it is the developed country's responsibility to provide. So as I said, it's the provision, mobilization, and flow. The provision aspect India has been always focusing upon. And if you see the so-called $100 billion goal per year that had generated back in 2010, and from 2012 to 2020 it was supposed to be there. So we, from India's side, we have already shown in multiple COP forums that the promises by the developed countries of provision or mobilization, and remember this 100 billion was the mobilization goal, even the mobilization has fallen abysmally short. So definitely it has been India has been harping on this particular aspect, that the scope, scale, and speed of climate finance, provision, mobilization, and flow, all the three aspects have to be augmented from the developed country side. Of course, we from India's side, the government of India and the state governments have been uh, putting their best effort forward through our domestic resources, which is very limited, constrained, because we do have other developmental imperatives. Despite that, we have been trying to put our best foot forward and go ahead with our climate actions. But as we see, and this COP29 has shown that how much of a fallacy, how much of a dubious character that developed countries have maintained over the climate finance. Right? I mean, it's there has been talks about, there has been papers which show that it's the requirement for at least the current NDCs of the developing countries would require around 5 to 6 trillion dollars, and it would require 1.3 trillion dollars per year up to 2030 for the NDC implementation. And what we got out of the negotiations is a paltry sum of 300 billion mobilization goal, with also from all resources, all sources, all avenues, and also they are pulling in the developing countries to put their money in. So it's really disheartening from the outcome. And India has been, of course, India has highlighted the uh, shortage, the failure of the developed countries' initiatives on this climate finance aspect. Because COP29 was supposed to be the finance COP, and after that, this is very heartbreaking, I would say.
That's actually a very good point you make about the fact that this was actually supposed to be the finance corp. So great hopes from it. And the other thing that you said, that the $100 billion itself has took such a long time to materialize. Given and this was before the geopolitical turmoil that we are referring to. But maybe if you could talk a little bit in your view, what would a fair and effective climate mechanism look like according to India?
Well, from India's side, of course, we understand that there has to be private sector participation in climate action. There has to be private sector investment from climate action, but the responsibility comes from the public money from the developed to the developing countries. And there has to be a substantial amount. Even if you see the Green Climate Fund, which is supposed to be a 100 billion corpus fund under the UNFCCC, as of now, I don't think it has even crossed the 30 billion mark as yet. Though India is one of the biggest beneficiaries of the GCF projects, because India has been putting good projects through our both direct access entities and international access entities. But I mean, and with the current regime in the US withdrawing from all climate commitments, it is going to be very difficult for all the developing countries. In fact, yesterday itself, the United States have uh, curtailed their so many development aids to various developing countries. I think Sub-Saharan Africa was one of the biggest recipients in development aids, and that has been withdrawn. So it is putting additional burden on the already resource scarce uh, situation of the developing countries. So this is going to be tough. And India has been very vocal about understanding how the climate finance flow would be coming. Because if I participated in COP24 when the Paris Agreement work program was being framed, there was a huge resistance from the developed countryside to have the new and additional aspect to be reflected in the Article 9.5 decisions, Article 9.7 decisions, but we prevailed over that. Definitely, because the developing countries had put a very strong foot forward with a very concerted effort. But if you see, the resistance has always been there. We have tried to. In fact, if we are supposed to understand what climate finance is, all we have gotten from the developed countries is a compilation of what can be the possible definitions.
Hmm.
There is no multilaterally agreed definition of climate finance as of now, which India has been vociferously arguing in various climate forums, including the COPs. So this primarily asks that what can we expect now?
Hmm.
This is a big issue.
So then two interesting things that you're then saying. One is the fact that ideally it should be public funds, which basically then translates into either grants or concessionary money that is available to developing countries. And the second you're saying is that this fight has been an ongoing one between the developed and developing countries, and that developing countries have prevailed before, while this COP kind of was a failure. Uh, you have been part of multiple COPs, and maybe you'd like to tell us share a few anecdotes maybe of how what your experience at COP negotiations typically have been, and an insider's perspective, so to speak, on why are climate negotiations so tough for developing countries.
Well, first of all, the developing countries have the umbrella group of G77 and China.
Yeah.
And even within G77, there are various subgroups like like-minded developing countries, AOCs, ILAC, and all those things, SIDS, LDCs. So obviously, these are dominated by their own regional geopolitical geoclimatic situations, which definitely has to be taken into account. Of course, a sub-Saharan Africa or the or the below sub-Saharan African country requirement for climate action and climate finance would be different from a SIDS or AOSIS, which small island developing countries. Uh, there would be differences, but what we try to do with during the G77 positions, we try to collate the common positions, and we put forward a common requirement. We put forward a common ask from the developed countries that this should be at least the basis. Of course, after that, individual countries or individual groups are very much free to put their additional requirements and additional asks during the negotiations. There
Hmm.
has to be a common ground,
Hmm.
and getting that concerted effort within all the 77 countries is not a very easy task to do. Even
Can imagine.
I can share my own experience. I have been the LMDC negotiator also, apart from being India's finance negotiator. And LMDC has around 25 to 30 countries, and getting the consensus on all the countries is, one needs to have a very concerted and coherent effort. And obviously, India's leadership has been trying to do that for a long time, and placing our demands, placing our requirements, and putting a common thread to all the countries, and their climate finance requirements has to be is always a challenging task. So
Hmm.
uh, we had to have a very balanced approach.
Hmm.
So this is one of the issue. I won't say issue, but this is one of the challenges that we, as negotiators, we have always faced. But of course, we have to put our country's requirement to the forefront. Along with that, aligning it to the other like-minded groups and their requirements, placing that as a common uh, position of the countries. And well,
So,
with respect to anecdotes, there has been so many. I mean, it will take a long time, but I'll be happy to share one or two, if you want.
sure, please.
So I would like to share one aspect during the COP25 in 2019 Madrid. Uh, we it was actually we all know that it was earlier supposed to be in Chile. There was some political
Yeah.
turmoil in Chile. It was shifted at the last moment to Madrid, though the presidency was the Chilean presidency. So during those negotiations, India and some of the developing countries from the LMDC, we were specifically asking that we need to know what climate finance actually is,
Hmm.
what the definition is of climate finance, which can be multilaterally agreed. We are not saying that you take our definition fully. It has to be multilaterally agreed, both from developed to developing countries. It has to
Hmm.
be agreed by all the parties. But there was a huge resistance. And in the last moment, and second aspect was that evaluation of the $100 billion goal.
Hmm.
I mean, in 2015, the OECD, there came a report from OECD that they have already fulfilled their $100 billion goal and everything. India had refuted that with a very strong paper. I didn't attend 2015. My boss, Rashtriya ma'am, she has been one of the pioneers of climate finance. She presented the paper, and it refuted the OECD claim very brutally. We followed up the same thing, and in 2019 we asked, we need a definition of climate finance. We need to understand how much of $100 billion goal has been fulfilled.
Hmm.
So there has to be an evaluation.
Hmm.
We were asking that there is a standing committee on finance within the UNFCCC process. It can have the evaluation done. But there was an immense resistance. Even the presidency was not very. They gave us a take it or leave it offer, and we had to say
Yeah.
that we cannot. We have to impose a rule 40. I think it's the rule 40, right? To
Hmm.
get the same agenda transferred in the next one.
Yeah.
So we had to ask for the same thing. We had to ask for Rule 40 and let it go in the subsequent COP, which was supposed to be in 2020, but COVID and all,
Hmm.
it ultimately came into 2021, and it was very challenging. I mean, there was a situation where, being the LMDC and India negotiator, I was fighting at least a team of developed country representatives on this particular aspect, Couple of countries were there to support me. I think China was there. Uh, from African nations, there was one negotiator, Mr. Kamal Jamal, who is a very senior negotiator who had been supporting me. So, but we had to tell them that this is not an unjust ask. This
Hmm.
is something we need to know. You are claiming that you have fulfilled your commitments. Let us have a definition, because if we have to understand how much of climate finance you have fulfilled, we have to first understand what climate finance is.
Hmm.
There has been a climate washing trend on all financial flows. Even the developmental aid and all those ODAs have been touted as climate finance. But we need to differentiate that, because that's where the new and additional aspect comes up.
So,
So there was a huge fight on that.
so essentially, this has been a battleground. COP has been a battleground between developed and developing countries over even from the basic definition of climate finance to then what should constitute
Yes.
climate finance. That sounds like a challenge that isn't going away anytime soon.
But
So,
I must appreciate the COP26 presidency, the UK presidency, who were very um, accommodative of how and what developing countries want. Because
hmm,
if you remember, 2021 was a COVID second phase period. There was the subsidiary body meetings which went on through the online mode, and
yeah,
due to time differences, there was late night meetings, early morning meetings. But the UK presidency had been very proactive, and they approached the countries that what you exactly want, because they wanted to have that COP a success. And of course, I must thank them. And we got the both the climate finance definition and the $100 billion evaluation decision. I
hmm,
don't know, not much progress have been made after that, but
yeah.
still, I must thank. I must appreciate the proactiveness of the UK presidency during those days.
Of course, I mean, that is also the COP that we will remember for the Prime Minister's announcement of our
Yes,
net
yes,
zero target. So that's an important COP for us. But that's good
yes.
to know the
And
background
India
about how.
reciprocated. India raised our ambition.
Yeah,
We had, I mean, having the net zero and the renewable target, which is not very easy for India. Still,
yeah.
we made our commitment. So, of
So
course,
basically, cooperation is going to lead to a
definitely.
ambition that seems to be a good lesson for all countries to learn. But we seem to have learned as India, the lesson also seems like that we need to now up our game given the turmoil. At least that seems to be evident. And I'd love to hear more from you about it. Because the economic survey this year, for instance, has talked about how India has received only around $1.16 billion in climate finance, which is nowhere close to what it requires. Do you see India shifting strategies now? Do you see us focusing more on domestic financing, given what we are experiencing and what your experience seems to show in terms of trying to negotiate deals at fora like the COP?
Well, after seeing the decision of COP29, it's very evident that we cannot expect much, at least bilaterally, from the public money of the developed countries. We have to rely upon the multilaterally agreed climate funds that are under the UNFCCC, be it GCF, be it Adaptation Fund. Now that Loss and Damage Fund is coming up, the initial preparations for that are ongoing. Of course, we obviously India has been putting India's public money on the climate action, so there is no denial. We have already taken good strides on that. Now, what we need to do is understand how we can induce more private finance from not only the from our country itself, from also the developed countries. Because let's make it very clear: there is no denial that these developed countries are not going to push for any further commitments. But there is a silver lining. If I see from the architecture of the UNFCCC, as this particular outcome, this 300 billion mobilization goal outcome, is under the CMA, which is the Conference of Parties, under the Meeting of Parties, under the Paris Agreement. but there is already an existing mechanism under the COP mechanism, which is under the UNFCCC. That's the long-term finance.
Hmm.
So all is not lost.
Hmm.
We can, as India, we can, in the negotiating table, we can re-energize that long-term finance agenda, and we can push forward. So that can be one strategy in the negotiation front. If you have to think about how to get the money within the country, of course we have to engage bilaterally with many countries. We have to engage through the multilateral funds, be it the development banks, of course
Hmm.
GCF. And I dare to say that GCF success will depend on India's success, because India has such a diverse geoclimatic condition, and we have so much of climate action requirement.
Hmm.
And India is one of the biggest economies, and if the one of the biggest economies has to sustain in its low emission pathway, low emission intensity pathway, better adaptive pathway, better resilient pathway,
Hmm.
the international community has to cater to India's requirement. So what we need is, from domestic side, we need to create better projects through the GCF,
Hmm.
and we have started in fact, Ministry of Environment has started the outreach programs. It has been going on for a while. It's
Yeah.
now getting even better momentum
Hmm.
to make the states aware how can they create better projects to access the GCF funds as well
That
as the
makes sense.
adaptation
Yeah.
funds. So that's one.
Yeah.
Of course, we have to bring in the private money, because
Hmm.
India's private sector financial market is a very thriving and vibrant market. Though the current stock and trends may be a little bit under the damp carpet, but we have a very thriving and strong financial and private sector.
Hmm.
Of course, the mitigation sector has already a very clear cut profit motive where the private sector can invest, have their profit, and again contribute to the climate actions. We need to have certain ideas of how we can draw in the private investment in the adaptation.
Hmm.
So that will be interesting. And if you know that India is already in the process of preparing its national adaptation plan.
Hmm.
National adaptation plan is a very broad framework that we'll be giving for the country, conforming to the NDC requirements, NDC commitments. But the states and the local governments have to also devise their own curated and locally required adaptation plans. Many
Hmm.
of the states have already framed their state action plans on climate change. But now
Hmm.
the adaptation plan, because if you see, India is ravaged by at least three prime adaptation action requirement or adaptation imperative. One being flood,
Yeah.
second being cyclone, third,
Hmm.
which is very new, is heat.
Heat.
So there has to be a plan from the local angle, from the macro national angle, also from the state angle. But
Hmm.
that synergy has to be supplemented by the international finance, the
Hmm.
domestic resources, and
Hmm.
also the private sector participation. And
Okay.
recently, you were there during the Kolkata. We had the workshop over there,
Yes.
and we have seen a huge organization like Bandhan Group, Bandhan Bank, has come forward and shown eagerness to participate in climate actions. So that's a very positive trend we have seen.
Absolutely, and hopefully we'll see more of these, more private participation and more banks stepping up to meet India's needs. If you can go back just a step back and explain a little bit more, talk a little bit more about this long-term financing avenue that is available to India, and then maybe we'll come back a little bit to the adaptation measures that can be funded. So,
Yeah, the long-term finance program is under the COP. It is under the UNFCCC agenda items, and since it's not governed by the CMA or the
yeah.
Paris Agreement agenda items, so that area, that particular aspect, can be re-energized and reprocessed, and India can push its best foot forward on getting the long-term finance agenda item to be uh, revamped again. And that would give, because this 300 billion is nothing but just an eyewasher. I don't want to use any unpolitical words, but it's just next to nothing. So the long-term finance work program can be used by India and the developing countries to go ahead again to push forward that this requires in all the developing countries, and our climate commitment requires much higher financial commitment from the developed countries. And of course, it
Hmm.
shouldn't be only limited to the mobilization goal. It has to take into account the provision and the flow as well. So even
Hmm.
if we see that Paris Agreement Article 9.1 talks about provision, but in the COP
Yeah.
decision, COP 29 decision, we see there is not a single reference of the provision aspect. So that point,
Hmm.
that particular aspect from the UNFCCC and the Paris Agreement, it can be re-energized within the long-term finance aspect.
Hmm. So that is something
Yes,
that is one
yes. From the
option that is
international
open to India
segment, yes.
and developing countries. Yeah.
Domestically, we have been talking that we need to draw in our private sectors, not only mitigation but also adaptation. Very recent Kolkata workshop that we conducted from our ministry side, we have seen a huge organization like Bandhan Group has expressed their eagerness in participating in climate actions. So these are silver linings that are
Yeah.
coming forward, and we have to get more private sector engaged on adaptation, on
Hmm.
mitigation, everything. And of course, the India having a huge and thriving financial market and private sector, there is the sky is the limit.
Which is a very good segue, actually, because into my next question, because that's exactly where I was trying to take you to understand. So, if this private sector involvement in climate action is gaining momentum in India, uh, what kind of policy measures should ideally be put in place to encourage and strengthen this? What are we already doing, and what needs to be done to ensure that it
Well,
continues?
from mitigation aspect, the private sector has been very proactive already. We have seen in be it renewable energy, be it energy efficiency, electric vehicles everywhere. Beg your pardon. Uh, the mitigation has already gotten its share of private sector participation. Now we have to reformulate our policies to draw in the private sector in the adaptation aspect. Now, as the common thought process goes on, private this adaptation is supposed to be a public good, which there is a
Hmm.
non-exclusivity and non-rivalry component in the adaptation aspect. But I dare to challenge that even with even with adaptation, there can be a predefined profit incentive very well placed. How? It cannot
Hmm.
be an all pervasive, all permeating policy. It has to be curated to the required sector specific requirement. For example, if we are thinking about
Hmm.
even mitigation, if we are supposed to establish some solar parks in the coastal areas, shouldn't they be climate resilient as well? So there
Hmm.
is a possibility of creating a profit incentive and profit private sector participation in resilient mitigation aspects. Second point, if we
Hmm.
think about agriculture, we need climate resilient seed varieties, which can offer a
Yeah.
huge market for the private sector to do the research and development, participate, and also engage in a commercial basis to get climate resilient
Hmm.
seed varieties and crop varieties introduced in the for the agricultural sector. So sector
Hmm.
specific market introduction.
Hmm.
I confess that I have a capitalist mindset a little bit, though. I mean, of course, it's sort of a balance between socialist and capitalist mindset. But we can think about certain markets which can create that profit incentive for the private sector very well established. So our
Hmm.
policies towards adaptation, of course, are trying to greaten the private sector itself. As I talked about
Hmm.
the national adaptation plan, there is a very
Hmm.
strong component of discussion which is going on how to energize and how to induce the private sector to come more and invest in the adaptation requirements. Resilient infrastructure is a huge potential for market. So
Yeah.
these are the policy measures that we are in the process of developing, thinking, and formulating. And of course, we need
Yeah.
people from academics, we need from financial market to participate, and that's what we are thinking about. That's what we are trying to do. It will be a long-term process, of course. There is no doubt about that. But the thought process has already emerged, and we are trying to go forward with this particular thought process to make it all comprehensive and all participating policy and action oriented process.
That sounds very heartening, and very raises hopes that there are solutions to be found. Do you think then this also means that India then looks at mitigation, adaptation, and the funding definitions that we have for adaptation, for instance, that we need to create our own, because typically adaptation projects are looked upon as projects that will not get, they don't have a profit motive. That their funding is considered more difficult to acquire than a mitigation project. Does that mindset need a little bit of change, or does that is there thinking in terms of
Yeah,
how to broaden
that's
that
where
definition?
the policy nudge comes into action. And I would say that any market failure comes from information asymmetry. And the market failure for
Hmm.
adaptation also is from the information asymmetry that there cannot be a profit incentive. That's why, as I
Hmm.
was saying, that if we can introduce a market model, depending on the sectors where it can be introduced, that can draw in and that can mobilize, even change the mindset of the private sector to come and participate. So that nudge is being provided by the government policies through the government declarations, through the various policy initiatives. And of course, the National Adaptation Plan will have a great role in playing in that particular.
Hmm. And we will look forward to seeing the national adaptation plan soon. That's something that really is a very interesting development. Um Alongside the other thing that I wanted to ask you, because you brought this up also earlier on private sector uh, participation increasing, the one of the policy measures that India has been talking about is setting up
Right.
carbon markets. Can you talk a little bit about how how this can help the country? What form and shape
I
can
don't.
this
I
take?
am no expert in climate, carbon market, but I can give you a very brief idea. Now that we have a very specific decision out of the COP29 on the carbon market, Article 6.2 and 6.4 of the Paris Agreement, India is in the process of preparing its national registry for the carbon market. It's
Hmm.
primarily from the
Hmm.
compliance market, which is under the 6.4 of Paris Agreement. 6.2 is bilaterally engaged and it's a voluntary market. So with voluntary market, the entities are free to engage among each other to sell their carbon offsets in a price bilaterally determined. Whereas the carbon market, under the compliance, there has to be a pricing mechanism. Now, the question arises
Hmm.
whether the pricing mechanism, how it has to be formulated. I mean, see, there are certain sectors which are hard to abate, there are certain sectors which are easy to
Hmm.
abate. So a sector which is hard to abate cannot have the same price as the sector which is easy to abate in the carbon offsets. Of course, the hard to abate requires
Hmm.
more research and development, more participation, more effort. So the pricing mechanisms have to be curated from that end. So there has to be some sort of price
Hmm.
discrimination on the carbon market
Hmm.
based on the sectors we are talking about. A steel sector cannot have the
Hmm.
same as the brick kiln sector. Secondly, which sectors are we going to put in the compliance market? Whether we have already made a good progress on the renewables and it shows a huge carbon offset that we are creating. Uh, but whether we are supposed to provide that in the market mechanism, because that will reduce our NDC commitments from the bargaining side. So those things, those
Hmm.
aspects need to be understood, because the CCTS, which is being developed and which will be operational, I think, it needs to take into
Yeah.
account these particular nuances of the carbon market. And yes, private sector will have a definitive role to play in this, because ultimately it has to be the industries, it has to be the private sector Who has to reduce? Because the government will reduce the emission anyway because the government is committed. Now, how that commitment
Yeah.
will translate in the private sector, how they can benefit from it, that is one interesting area that we need to understand. Also, this will have an implication on the
Hmm.
European CBAM because uh,
Yeah.
the EU
Hmm.
conditions are much more stringent and
Hmm.
detrimental for our industries. So, what should be
Hmm.
our counter strategy? Not to
Hmm.
not jeopardizing our exports and also maintaining our climate commitments, both that we need to devise. I think Ministry of Commerce is on the process of preparing a plan on that. I don't have
Hmm.
much idea about it, but they will be coming out, I hope, very soon, about how they think about going
No,
forward.
but this is also very helpful, and it's helpful to understand, especially in the context of the EU CBAM. And although they have said that 80% of their countries companies will be exempt from it for now, but even then, it is a sword
Yes.
that hangs over Indian producers of steel and cement. But how, if you could talk a little bit about, so which are the sectors? You said hard to abate sectors will benefit. Uh, the others will also, and also a little bit about how then the Indian carbon markets aligns with the global carbon markets, or say how it can compare with EU's emissions trading systems. Is there any idea that we
At the
have at the
moment,
moment
I
of how?
personally don't have much idea about it, but of course, there has to be an
Okay.
alignment, especially on the compliance market,
Hmm.
because that would have a bigger impact on various
Hmm.
sectors of the economy. So whether it has
Hmm.
to be fully aligned or has to be domestically, because any market mechanism that has to be created, it has to take into account the national circumstances. Without that, we cannot
Yeah.
just, I mean, just for the sake of aligning it to the global commitment and jeopardizing our economy cannot be something that we should envisage.
Hmm.
So at the moment, I personally don't have much idea, but it is in the process of development. So as the government will bring out their notifications, we'll get to know.
Hmm. We look forward to that, but this was helpful in itself. Um, But going forward, now that we know this is how India is looking at moving ahead on its own, we're also preparing for the COP this year. And what do you think will be the key priorities? Because it was helpful to know about the long-term finance agendas. But other than that, what will be the key priorities that India could be pushing for, especially for climate finance in
Well, in the
these
upcoming COP in
negotiations?
Brazil is supposed to be the COP of adaptation. Brazil is very keen on adaptation
Hmm.
aspects, and presidency will have a very strong say over the outcomes on the adaptation. It aligns with India's interest definitely, because for India, adaptation would be, given the priorities, it has to be one of the biggest areas that needs to be focused. Now, how we need to align it with the climate finance, we have to curate our strategies from adaptation finance angle. Uh, we see
Hmm.
that adaptation fund under the UNFCCC, they have doubled their financial kitty, but it needs even more. Now, that
Hmm.
particular aspect of adaptation financing can be linked with the long term finance aspect as well. So, how much of
Hmm.
adaptation finance, how it should be, there has to be a dynamic process. In fact, before the NCQG, we talked about, I published a paper also, how there can be a formulation. It has to be uh, temporal aspect is to we say that it's a 2QTD approach. It's qualitative, quantitative,
Hmm.
temporal, and dynamic. So that aspect
Hmm.
needs to be brought in when we think about adaptation, because the requirement of adaptation will further have a even more dynamic aspect. The heat wave, as I
Hmm.
mentioned, which is a very recent phenomenon, so it shows that we
Hmm.
need to focus upon these aspects as well. Whereas India has been suffering from cyclones
Yeah.
and floodings. It has been a long
Hmm.
problem that we are facing. And with the climate exacerbating the same situation, it is going even higher. So that dynamic process
Yes.
needs to be engaged in the adaptation financing and how it can be a process in the long term finance as well. So that's my take on this,
Hmm.
on for the COP, how we should strategize.
Interesting. And I'm assuming that the national adaptation plan that comes out by then will also inform
Yes,
how we
it's
plan our
the requirement,
strategy
resource requirements will
for the year.
have a very strong imperative of it.
Hmm. Well, that brings us to the end of this very interesting conversation. But before we let you go, I'd love to understand because some of our listeners are young students or policy students who are looking at coming into climate policy work. Uh, as someone who has worked across finance as well as climate policy, what advice would you give young professionals who want to enter this field?
Starting, anyone who wants to start, they have to understand the UNFCCC and the Paris Agreement. That's the These are the basic Bibles, and of course, after that, go through the decisions. It has to be. I mean, one has to read between the lines how the decision, because any COP negotiation, any COP outcome has a very strong legal aspect, which not just from any stream who is participating. I myself, being an economist by training, I didn't have a law background per se, though I was in the state armed forces, so I had a bit of training of how to read between the lines on legal terms. But that these
Hmm.
three aspects one has to inculcate, that you have to read between the lines. Even if you're a scientist, you have to understand how the negotiation outcomes have an implication on your domestic policies, how your domestic policies have can have a vice versa implication on the negotiating outcomes as well. So
Hmm.
of course, economics being an all-permeating subject, one has to know, because climate change and climate finance cannot be bereft of economic understanding. So these four elements one needs to understand how and to proceed forward with the climate policies and participating in climate action throughout the country. And of course, one needs to have a very grounded approach from bottom up, because that's what we are lacking in fact from the state governments, from the
Hmm.
local urban bodies. We need to understand how the bottom up approach can be re energized and reprocessed and strengthened. So, these are my takes on this.
Excellent insights, actually. Understanding grassroots, yes, that's something India definitely needs, and to understand how money works. But this has been a very insightful conversation, Abhishek. Thank you very much for sharing your expertise with us. And uh, before we wrap up, any final thoughts for our listeners
Let's be climate
and
aware, and let's
how?
be aware of the requirement of finance. Let's put pressure on the developed countries because they have the commitment to fulfill. Follow
So
the
follow
money.
the money. That's great advice.
Thank you.
Thank you
Thank
so
you for
much.
having me.
Thanks, Abhishek. And yeah, we appreciate your time and your
Thank you. Thank you.
contributions. Thanks a lot.